Thank you lots, Karina. Welcome everybody, welcome to my webinar, broadcasting live from Mexico City. This is me myself, Alberto Alvarado. This is my free YouTube channel, iiivb's Training Room channel. And wait me a second because I just uploaded. Here it is. After typing iiivb's Training Room channel YouTube, this should show up. And you click subscribe. Remember that the channel is getting active and active every day, so don't miss the fun there. Well, today is Friday, right? So TGIF, thank God it's Friday for some. Some others we are not that happy to have the weekend. But well, I believe there is something that is called life outside trading, so I believe I need to give it a try this weekend. We're going to review how my trade's doing, and yesterday we had a very short briefing on the usual kind of webinar that I deliver, because I was only able to broadcast 30 minutes of it. So I really let a lot of things in the air. So we're going to review them. I consider them to be important. Maybe this webinar won't be that long. I mean, I always say that. But yeah, since I am not exploring new opportunities today, only talking about why of my trades, why I held them for so long, and how I've been doing to handle the huge loss in my trading accounts, my trader contest account. I mean, there are not going to be a lot of things. Here's to give you an example. This is the trader contest performance page. I'm in the, at least here it says I'm in the 330th position with now $35,000. Yesterday was, I believe, 25 or something. So I am back where I put these accounts at the beginning of the week, more or less on Tuesday. So yeah, I could say that if I managed to close it in this, I didn't lose anything of Tuesday's profits. But it's not that simple. I need to explain you why I decided to keep the trades open, etc. This is how it looks like, my trade, my positions. Now I have two, a Mexican and Kiwi trade, Mexican long, Kiwi short. These are the amounts. You can see I am using the leverage of 90%. So I will face the same scenario that I faced the very first weekend after this month started, trading contest started. That is that if this is not at least at 60% in 11 hours that the margin reduction takes place, I will have again a margin call. I'm not really interested anymore if I have less points, because I don't close those trades with limit orders, since well, all those points in my qualifications are so low that well, I just simply made up my mind that I will simply won't be able to get into any important position at the end of this competition. But at least my very objective is at least if I cannot change the huge drawdown of this account that hurt my 6 and 12 months performance, at least I want to close the account in profit, or at least break even. So the rest, even if I open market orders or not, I'm not really interested, because I already know that I won't be able to get into any paid position. So that is when you realistically adjust your goals, and this is why you always need to have a goal and an objective for every trade and for your trading career, etc. You need to adapt according to that. Of course, in normal terms, in a live account, you shouldn't take this approach, because it would be like the end of your career if you consider that your trading account wouldn't worth to maybe try harder. That doesn't mean that I am not trying harder, but what I mean is that in a live account you make your own let's say mental cuts to measure your performance. But since this is a monthly competition, no matter if in the 2, 3, 6, etc. I do it very well, this exact competition I will lose it. So yeah, I need to adapt to the only objective that I am interested now, that is to put it at break even, nothing more. I don't discard maybe next week do some kind of not scalping, but at least very short-term trades like 10 or 15 pip to try to get to break even, and that's it. If I get to break even, actually I would have put the account from $15,000 to 100,000. So I believe that could be a great goal. So yeah, but these are my two trades that I opened. And well, as you can see, both of them are in profit now. This Kiwi short trade is almost at 30 pip profit, but it's a very low lotage. You can see here, and the biggest one is the Mexican peso, and apparently is doing very well. So I hope that at least in the next hours the trades go favorably. For example, now the Kiwi is dropping even more. It's now at 33 pip, and the Mexican peso, it's very close to the day before spike after the retail sales US fundamentals. So I will show you why why I considered these trades to keep them open. Well, as you remember, you can see clearer here my short trades here that I opened the Mexican peso, and this was correct. Then I open a short trade again here. I was conscious that again in this kind of situations in a live account, I take half of profits and let the half of them run at least. But here we had Yellen's speech. I was not expecting that bullishness, if you want to call it that way, from Mrs. Yellen. But well, just we had it, so as you can see here, my opening price was here. So when the price got here, I closed it in barely profit, like I believe it would have been like 10 pip euro dollar profit. And then I opened a long trade here, okay, pretty much at the same time. It went in my favor, retesting this resistance, then coming back, retesting the support, then spiking up, retesting previous highs, then pulling back, retesting again the support, and now it's apparently breaking convincingly the descending triangle of a very high quality 76% in the 1 hour. So yeah, we had this during the Asian session. So this is very awkward to happen the Mexican peso in Asian session. So I believe that yeah, we do have chances that today I switched my approach in this. If you remember, my trade was targeting the 21 zone, but I am targeting the 20.72 zone now because it's not visible now. But if you zoom out this chart, you will see that one of the axes of the triangle gets here in the 20.75. So I won't simply wait. In any case that the market gets here today, just to stop out, as you can see, it would be a huge move. I wouldn't be surprised that happening because of the very context of the Mexican economy. And even though after having very good fundamental US data, we didn't have the expected reaction of the treasury markets in the United States. So that was translated in some kind of weakness at times in the US dollar in a lot of majors, but not all of them. And I will show you why in the Kiwi, because Kiwi is a major. Some people like to consider it like an exotic or something, but I consider it a major. It's a major trading currency. And actually it did the complete opposite, and it's very important that we dissect why and the reasons why the Kiwi was the asset to analyze, and that maybe is telling us the real story on what we can expect next for the USD. I've been calling that after Yellen's and after the retail sales number that were at least in percentage points, and we received 100, a number 100% better. Reading, if you expect at a 0.3 and you go to the 0.6, in in percentage terms, you are receiving actually a 100% better data. Of course, this is relative. This is not the most accurate way to read that number. But what I have learned during my 11 years of trading career is that the markets are not objective, are subjective. And when you are really trying to confirm a bias, like for example, the markets are very eager to grab, to find some bottom, to find some floor, and to grab something to make them, to reassure them to just go for it and start investing, because it's maybe the only thing that we can expect from Donald Trump's administration is that at least if he's a billionaire, at least he knows how to do businesses. And that is what the markets are expecting, to see that they, at least in the business side, they could simply rely on a billionaire's mind that would let them do businesses. So what I believe is that this kind of numbers, when you have the double of what you were expecting, even if it's in percentage points, they tend to read it over optimistically. So yeah, in the context we are now, I believe that the numbers that we receive from the retail side overall, I was explaining yesterday, that the retail side is the last place that you will see economic recovery, because retail sales is when the retail people, when ordinary people like you, like me, that are not billionaires, etc., actually go to the stores and spend more. That's it. So you can only spend more when you earn more, only when you're able to pay higher debt. One of the problems in the United States is that they are hugely in debt, but well, that is another story. But the thing is that people, even if they have credit, if they don't feel confident to spend, they don't do it. And now we're seeing the complete opposite. So yeah, I believe that it's just a matter of time that the market will end up reflecting wildly the real meaning of this number. I was saying that it was completely nonsense when we had this month's non-farm payroll number, that we didn't have a wild movement favoring the United States dollar. Was completely out of context, and the justification was that because the wages, hourly wages in the United States were lower than expected. No, I believe that that's only a very circumstantial explanation for the media to say, or to try to give the impression that they really know the reasons why the markets reacted in the contrarian side in respect to the non-farm payroll number. That was amazing. But what I believe is that the markets are just trying to take maybe just to, it's like when you try to jump from this in the swimming pools, in these platforms, 10 meters platforms. Even if you know that you need to do it, it comes at times that you are doubtful. You're like feel fear because you see the water and you see the altitude, so you say, oh my god. But actually you will do it. So I believe that is more or less what is happening. The markets are really trying to get acquainted, to get used to Donald Trump's new administration. They're kind of fearful of the initial way of rhetorics that he has as president. So maybe that is what's keeping them like doubting in the last minute. But are only doubts in the last minute. They will end up moving. If I'm not wrong, yesterday, the day before yesterday, was the biggest inflow of capitals into the United States economy, I believe, since the last 2 years. So that this gives you an idea how important was the non-farm payroll number and the retail number for the United States economy. This gives back, again, I was explaining yesterday that even if POTUS doesn't want to accept it, when you have a machine not only working, but performing greatly like these numbers, and you want to tweak it, to experiment because you say something is wrong, nobody's going to bite that. Because when you have something that is completely wrong, that is the idea that he's been stubbornly trying to sell everybody in the American economy, you don't have this kind of results. I mean, if you could explain why the Mexican economy is a mess, yes, it's because things are done improperly, incorrectly. So here you have the politicians trying to convince that we are performing correctly when the numbers are not backing those sayings. Okay? But here's the opposite. You have good results and you're trying to push the idea that the American economy is doing something wrong. So I believe that this will, and maybe that is why the markets are still like doubting a little bit, because they need to start seeing that POTUS will try to at least delay just to see further results, to delay the massive and experimental tweaks that he wants to give to the American economy. Because yes, in order to gain more employments, he's willing to even crash the NAFTA. But the cost of gaining more employment in the United States, risking all these good benefits, is something that the markets won't simply ignore, because those will be the most expensive employments in the American history. Because just to gain some more employments, you're crashing all the things that are done in a right way. So I believe that the economic forces, and if this is a smart man, and if this is a real businessman, he will have to accept the fact that he needs to at least delay any kind of experimental tweaks on the American economy. And he's already changed a little bit the tone of the rhetorics, Donald Trump. And I believe that that is giving the sensation to the markets as well. Maybe he's not just willing to crash all the things that got us to this point that we have good numbers now. So yeah, I believe that that's the reason why maybe the market hasn't reacted in the way they should. But when you see the smaller fingerprints in the price action, you see that actually there are a lot of bulls out there that are just maybe accumulating positions, expecting for a breakout in a bullish direction for the American economy. We have some comments. Sharpson says, the growth of Mexico economy just slowed greatly in the past few years. Mexico growth in 2016 was around 2%. Before it was much higher. You have high inflation. Trump power is limited. Yes, the problem here in Mexico is the level of debt. And the level of corruption here gives you an idea now that an ex-governor that is called Javier Duarte, sorry, he stole like $1 billion. And we have a huge amount of that money in debt. So it's not a good combination. When you have expensive loans that put you in an indebted position, and then you have politicians stealing all the money, that means that there is no way that those investments could at least at some point give some revenue, because they are stealing it all and putting outside of Mexico. Besides that, we have this energetic crisis with the monopoly of the energetic enterprise here, Pemex. So yeah, all the growth of the Mexican economy was due to the fact that, yeah, we are in the south border of Mexico, and even if POTUS doesn't want to accept it or wants to accept it or not, a lot of American enterprises, including General Motors, by the way, that they were in bankruptcy, the American government had to bail them out because they did things wrong. One way they made it to come back into profitability is because they were moving operations to Mexico, that they were cheaper. So that is why they were able to profit more and then to have healthy finances. But that is something that everybody has just forgotten, including this guy. The advantage is that we were south of the border. They didn't have to go to China or to India and to increase the shipment costs. So that is why the Mexican economy was performing not that bad since 2008, even if we had a huge devaluation. So if you look back from 2008 now, we have had a huge devaluation of the peso. But yeah, the economy was not that bad. It was growing. But now the problem are that, well, the American economy is getting healthier. the market forces are moving, that Donald Trump effect is still having an effect in Mexico, because no matter if we Mexicans want to accept it or not, yeah, any kind of change Mexico will be the worst part affected, because we are the weakest side. We have the weakest hand in this poker game between Canada and the United States and Mexico. So yeah, that is not helping us. So I don't have any kind of bullish scenario for the Mexican economy, unfortunately. I believe that this will get uglier every time. So, well, here it says, before you had 3 to 4% growth, I think before financial crisis you even had, or yes, before financial crisis we got good numbers. Before the financial crisis, but everybody was having great results. So for me, everything before 2008, it's a mistake. It's like if somebody was on drugs or on steroids, you really cannot measure a performance of an economy when you're on steroids. Because yeah, when the steroid effect passes, you really cannot perform how well you can do without those steroids. So I just try to count from the 2008 to now, and we see an initial good performance. Actually, the Mexican peso was one of the best performing currencies in the world against the dollar since 2008, I believe, to 2010. From 2010 to now, it's been a debacle in the Mexican economy and the Mexican peso. Many American companies produce in Mexico because of cheap labor. Exactly. Trump wants to force companies to produce in the U.S. than Mexico. But the devaluation of Mexican peso is just very weak. Is just very expectations for the future of Mexico because of Trump policies. Yes. Here we have a much more complex aspect, because we have this. I've been saying that in other webinars. This organized crime thing that is growing. It's pretty much impossible that you can find a politician that is not involved into organized crime. So that is completely destroying the social tissue in Mexico. And if Donald Trump believes that the United States is suffering the prices of drug abuse, he's completely on drugs. He's completely insane, because he should come here and live how we live here. Or how to go to El Salvador or to Nicaragua. That's even worse. Here we have the weakest hand. If the United States is suffering of something, we're suffering twofold the same situation, because we have the weakest hand. So here we have the consequences of violence, organized crime, corruption. I don't know if this wall is going to be built or not. I see it more and more difficult for that wall to be built, at least in the way he wants to. But imagine that he makes it. A lot of drugs will continue and will stay in Mexico, because it won't be easy, or as it will be tougher to get them into the United States. So here we have massive deportations that are starting. This guy has the idea to deport Mexican criminals that are actually in jail. So we're going to have back some of the Mexicans that we don't want back. And when you sum up that to the context of organized crime here, the organized crime organization will be more than happy to receive these kind of guys, just to empower themselves. So the social thing that will end, if you are fearful, and is this my case, I don't want to invest in Mexico, not a cent, because I am afraid of kidnapping. And I'm not the only case. And the worse it gets, the more people will start avoiding investing. So that will only hurt even more. So we're starting in this vice cycle, that all the situations now will only get the situation worse. That's what I believe. Product will get much more expensive. The U.S. companies will produce it. Yes, and that you know what? I don't really know if this guy Potus is crazy or something. But I believe that he believes that he owes people to accomplish that promise of you can promise employments, but when generating those employments there will end up flipping over all these good results, those will be the most expensive employments in the history of the United States. And the economic forces should push Trump just not to do it. Because Donald Trump will have to look for somebody's support because he's already isolated. So he needs desperately to really focus on the people that could support him. And the new employer, the new people that could have new employments could support him. But if after 4 years, even them having employments, they will be fired, it's like this thing of Ford. If Ford moves production to the United States, yeah, good for you and wish you luck. What you're gonna do? You're gonna what? Sell 30% more expensive Ford cars, demanding and pushing people to buy them because it's American? People will say, no, no way. If I find something cheaper and I cannot afford American things, because not necessarily that means that are best, that the American, for example, car manufacturing is better than Mexican, that doesn't mean that people will pay that extra price just because of this huge idea of Donald Trump. At the end, Ford will end up firing those people they've hired at the very beginning. So reality will impose. I believe that Donald Trump is learning. The only thing that I wish is that Donald Trump at least is something, a fast learner. If he was really wishing that he could get things done just because he's signing executive orders, he has realized that that is not that simple. And if he stubbornly tries to keep in that way, he will be wasting energy, time, and allies. If he learns fast, he could actually get a lot of things done, but maybe the problems are not where he is pointing them out. At least not in the NAFTA thing. Because this thing that Mexico is the most benefited, that is a lie. I invite him to come and live here during 1 year, and let's see if here in Mexico we have better conditions than there. If we have been the most benefited, we shouldn't have had this kind of immigrant. The United States wouldn't have these illegal immigrants from Mexico flowing in and not stopping. If we had good performance after NAFTA, all those people would be there with their families. They are going there because they are in need. Because we are not performing correctly. That is it. But that is why people call this kind of people populist. Because they say what the people, the ordinary people, the most impressive and maybe the most ignorant people are likely to believe. Not necessarily because it's the truth. Because the truth is, if Mexico was in so good shape, why in the hell that Mexicans keep flowing and flowing there? We have huge lands here in Mexico with no labor. So if that was right, people wouldn't be going there to the United States. They would be working here at the land. But guess what? We don't have that. So, well, I believe that now Donald Trump will try to face the fact that he won't be able to accomplish everything that he promised. He will have to simply quit dreaming on accomplishing some things. He will be able to accomplish a lot of them. For example, there's a massive deportations are happening because he promised them and he really didn't need any kind of authorization to do that. He will stick to that, to the things that actually he could do. And overall, now that he needs to overcompensate all the promises that he is realizing that he won't be able to accomplish, he will be focusing on the things that he can do. It was firstly the wall, but it's going to be very expensive. But the deportations are not really that expensive because there are already people being paid for that. Now they are just targeting them a new task. So that is the place where I believe Donald Trump's frustration will end up ending deporting people. And that's something that won't be helpful for Mexico. Well, because the good people that we're going to have deported from the United States, they are not interested in staying here. They will try to go back again. So they won't be working here, because if they left for a reason, they would simply say, okay, let's start working here because we have a huge lack of opportunities in Mexico. So they will try to go there. The criminals that will be deported here want to go to the United States again, because here they will have a good receivement from the organized crime. So, well, just bottom lining this, that is why fundamentally the Mexican economy, there is simply no way to revert the trend of the latest 12 years. No way to do that. The policies and monetary policies, the central bank is gambling with the interest rates since 2-3 months ago. Now we are paying 6.25% of interest. When Fitch just said that was sending us a warning that because of the huge internal debt that we have here, the qualifications of Mexico are at risk. And this guy is gambling with the interest rates. The only reason why the Mexican peso hasn't gone to this 25 already is because they are gambling with that. But the question is, where are they going to have the money to pay those interests if the Mexican economy is not performing correctly? So yeah, that is why it's a no-brainer, a fundamental long trade. So retaking this trade, I kept shorting this because, yes, I was expecting, I always had this macro fundamental thing in my mind. As I've always said, you need to keep your eyes and your mind in the fundamental bigger time frame direction, so you can have context of what you can expect on a trade overall when it comes against the fundamental and the larger time frame movements. So yes, I tried to be careful. I knew that at the moment here it retested here, since we are now in a retest, so in a support zone from the 2050 to the 19.50, that we could have a solid support to then continuation the next huge move to the upside. That again, since it's fundamentally driven and the movement could take decades, like this 11-15 years of the valuation of the Mexican peso, yeah, it could take 1 year or even 2 years range bounding. But the idea is that that there is no simply way to believe that it works just to bet for the Mexican peso, period. So people are just gradually start positioning themselves to make this to continue its natural trend. So when you have that, and when you have Yellen's comment, that is why I decided to close the trade here and to long it, because I knew at that moment that those comments were aligned with the fundamental sentiment, the larger time frame direction, and that, yeah, according to the context, that could be the excuse for the markets to simply start the massive movement to the upside. It didn't happen. It retraced, retesting this. As you remember, I told you that my account was configured that if in any case the 20.20 was reached by the market, I would have another margin call. So, well, I just decided to let that trade open. It retraced, retesting here again. We had a retail sales number, retesting this, then coming back, retesting this. So we have hesitation, but as you can see, it has been constantly trying to break, in this case, this line. We just had this in Asian session, so what I expect now is that the price will have to retest here or even to continue. And due to the fact that I just mentioned that my account is just if I don't have it from the pretty much 100% of margin usage to the 60% in 11 hours, I will have a margin call. So that would be that the price stays more or less above the 20.50. But something happened. I was tracking, trying to find that extra trade that could get me closer to, with this new take profit, 20.75, I wouldn't be able to put it immediately in profit, the account, but at least to make it to the 80,000 more or less, if this gets here. If I have a margin call, even if profit or not, well, that's going to be pretty much the ending of the competition for me, unless I find with a shorter time frame trade during next week to put it at break even. But I find it difficult because that would then challenge my live accounts, the attention that I put in my live accounts. That is something that I don't want to do. But well, here we have a very good signal, and overall, because the this band, this moving average, just crossed this line. So this is giving me the sentiment that yeah, it was a good call to keep that trade open, because when you screen the market for long enough, you realize that the markets are like humans, and they are fearful, they are cheerful, they get panicked, they get over optimistic, and we are in that. The market is just trying to find reasons maybe to feel comfortable to start flowing and putting money again at risk. And I believe that the time has come that the markets are realizing that yeah, the fundamentals, the U.S. fundamentals are right, and that Donald Trump maybe will stop fighting and arguing against the results, because it's nonsense. So I believe this should continue. I really expect that before 18 hours GMT time that I have the margin reduction, at least the price to hover above the 20.50 to simply avoid have my two trades open closed, maybe at profit, but due to margin call. The other one is that when we had started having that breakout in the Mexican peso that I just showed you, I just shorted here. I was tracking this, and this is the important thing that I want to comment. We had here Yellen's words, dropping the New Zealand dollar, aligned with the fundamental on the dovishness of the Bank of New Zealand. That after having this, the reminder, this is the weekly line that I've been reviewing during other webinars. The one that was broken, that left me to open a bullish trade that didn't get to the 0.74. Then we had the dovish comments on the Royal Bank of New Zealand. Then it broke below this line. Then we had Yellen's word suspiciously moving up. Then we have retail sales respecting this, not doing what the rest of the majors were doing at this moment, and then trying to push this above. I was telling you yesterday that this is not uncommon, okay, and that what I was expecting is that the price should go below this line, at least this week close below this line, below the 72. This happens for a reason. My reasoning behind opening at that time a bullish trade in New Zealand dollar, that doesn't mean that I don't commit mistakes. Of course I commit mistakes, and the result, if I have a loss, that's a mistake, period. Because I'm here to gain profits, not to be right, but not being able to profit. Even if I am wrong, but I am able to make a profit out of it, I am correct, even if my initial assumptions were wrong. A lot of people trust me because this trend line is a weekly one. We had 2 weeks constantly retesting this. And we had expectations, and I can tell you that I was not the only one expecting that the new millionaires moving to New Zealand, inflow of capital, were expected to have an influence in the Royal Bank of New Zealand, maybe to have a more hawkish comments because of these new investment flows of these people. This should help the New Zealand economy, or should have already helped this New Zealand economy, but due to the dovish speech from the Bank of New Zealand, a lot of those expectations that in my opinion caused this weekly breakout, trendline breakout, that may be trying to say, okay, no matter what, maybe one of the best performing economies besides the United States could be the New Zealand one, just because of the fact that a lot of millionaires are moving there and they are going to invest money there. But apparently the markets reassessed that and reconsidered that maybe that is not going to be the case, and that is why they sold off after having the bearishness of the Bank of New Zealand. Then the trend line was respected, then again sold off, then we have Yellen, then we have here the retail sales, and then we had this very suspicious, because if I am not wrong, during this time we didn't have this in other majors, at least not in this magnitude, because having a 50 pip movement in the New Zealand dollar just straightforward is not that easy. So this is the reason. We have here a psychological level 72, and here we have this weekly trend line. So I can tell you that I was not the only one misfooted, and I'm talking about more investment like people, because there were really hawkish expectations from the New Zealand central bank. So usually what the market does when you have, in this case, weekly trends broken, that for some reason misled to institutional investors or hedge funds to have trades open and maybe in the wrong side, they usually try to figure out a way to confuse the markets and to maybe move them to manipulate with artificial inflows of demand on New Zealand, to create the illusion that maybe the initial breakout is correct, and maybe the price and the market just broke to the downside to gain more track and to start moving up again, maybe to that 74. But this is not uncommon. Having a psychological, when it meets a weekly or monthly trend line, overall this is weekly, this you can bet that here you will have huge flows of people, first of all because it's a no-brainer. If you have a psychological with this trend line, a lot of stop losses were here, just above this line. Just look where the price, this is the hourly, so this is not precisely noise. The price jumped here, then retested this line to the pip, you can see, moved that up again. But what I believe is that this, here it says sharps and US dollar pair are very hard at the moment, sorry. You mean the euro dollar, that the dollar is suffering? So, well, all pairs. Well, the New Zealand dollar is precisely doing the opposite. The dollar is strengthening. I believe that the New Zealand dollar, since if we go back and analyze the majors, if I'm not wrong, is the only major that before Yellen's speech broke a very crucial trend line, in this case a weekly trend line. If I'm not wrong, this trend line comes from the 2014. So I believe the New Zealand dollar is the real compass to know the real direction that is next for the dollar. The euro dollar, since this risks of elections next, I wouldn't consider it like an accurate compass. But as strange as it sounds, I believe that Kiwi is telling us the real story that the dollar will do in the next future, that is to strengthen, because it was the only one having the enough steam to at least break this weekly trend line. New Zealand dollar is very weak because of the weak number yesterday. New Zealand was weak because of the retail sales yesterday. Yes, but at least my reading is not this weakness due to that number. We're at least in my mind, I am picturing this upon and drawing my strategy upon a weekly trend line broken 2-3 weeks ago. That was a fake breakout, and just after the dovishness of the New Zealand bank, this trend line was broken again and the price holding below. So this is why I believe that, of course, this is aligning, this is helping the New Zealand dollar to weaken. But the real reasons is, at least for me, is that a lot of institutional investors, etc., were pushing the price here. And we have 5 minutes. I will shrink the time frame here so you can have an idea more or less on the okay, here it is. This is interesting. This will explain why. Of course, as I've been saying, I could be wrong, but we need to be able to give our own explanations to the markets. So we can play and we can draw a plan upon something. The New Zealand dollar weakness started since the Royal Bank of New Zealand dovishness. So even having good numbers by the New Zealand economy, I really don't expect to have bullish sentiment on New Zealand. Maybe only transitory, but not really well founded. Here is why. This is a 50-minute chart. This is the weekly trend. Just I want you to draw your attention here. This was to the pip. Okay, so this, trust me, here we didn't have somebody that is watching this precisely trend line was watching this. So if you see here after the market broke again this, trying to create illusion that maybe the market will here retest and shoot up. Actually what happened is that here we had a massive flow of money that for some created the illusion that this could shoot up, and it made just the opposite. Why? Again, here, if you're an institutional investor and you want to get rid of some trades that maybe you were missuited or try to revert your positions at a good price that maybe you weren't able because of the volatility, what you need is to create at some zone, conflicted zone, some kind of expectations that if they were long, they could have somebody to sell them something. So the only way is to create demand here. First of all, switching and triggering stop losses here. I'm not talking about retail stop losses, but more bigger ones. Here, when when you have a short here, stop being triggered here, that means that here is demand, and they are there to cover the demand, selling what their stuff. So that is what I believe they started doing at this zone. And this volume here is what is giving me the clue that actually that is what was happening overall, because having this after retesting this support, this huge volume, and then having this very obvious breakout to the downside on lower volume is because this was fake. This was not a volume to the upside. Actually, here was the bulls getting rid of their positions to the maybe most impressive traders that believe that maybe this could continue to the 73 at least. So this happens all the time. Overall, when you're watching trend lines in the weekly, that is why to the pip, this trend line being touched, and then having this, after having this volume, at least in my opinion, I believe that I was right reading that this was a kind of work of institutional investors trying to get rid of their positions above the 72. Sharp sense. And I guess I will have to close this, but well, let's read up quickly. Before, New Zealand was one of the strongest currency against the US dollar. The rumor about further cuts will push the New Zealand dollar probably down. Are you now very bearish for the New Zealand dollar? Yes. Super bearish on the New Zealand dollar because I am so disappointed, and I believe that there are a lot of investors, overall the big ones, that are going to be very disappointed along with me, because we were really expecting that maybe one exception could be the New Zealand dollar because of that capital inflows. But apparently the millionaires are moving to New Zealand, but not moving their money with them. They maybe just keep them invested in their origin sites, most likely the United States. So yeah, I believe that's all what left this massive breakout since the last maybe year just faded away in an instant. So yeah, I am super bearish, at least for the moment, but I will keep you updated, Sharp Sense. I would like to thank everybody for showing up. Thanks a lot, Sharp Sense Peter, for your feedback. I really like to have feedback from you. And I would like to thank Katerina for recording the session, for hosting as always. I don't see David around, so well, maybe I just will take one more minute to answer this last question. I think also considering purchasing power, the New Zealand dollar is still high. Royal Bank of New Zealand don't care if the New Zealand gets weaker. Yeah, well, I'm not that versed into the very details of the New Zealand dollar economy, the New Zealand economy. But what I really consider is that this millionaire inflow could really put the New Zealand dollar at the same altitude like the Australian economy. In any case, that the millionaires actually move money there. Uh, the New Zealand dollar is like the what you say, the smaller brother of Australia in terms of economics. So it's much more dependent on what they sell to Australia. So I really don't know what's going to happen to Australia because of this Chinese thing and this potential commercial war between China and the United States that apparently is fading away a little bit because again, fortunately, POTUS wanting or not, he cannot argue against results. So the best thing he could do now is to let things flow as they are, to gain track and to leverage with new people his presidency to get things done, and maybe to move his support from the basis, from the ordinary worker of the United States, to the ones that are really performing accurately thanks to the good policies of the United States. That would be simply, if not, that would be 8 years of lost time during Obama administration, and that the only economy that it will hurt will be the American economy, not other. So yeah, in any case, that maybe we have the Chinese economy settling down the problems with the United States, then Australian economy could to regain some more steam, and then that will hit possibly the New Zealand dollar. But you know what? This trend line, this weekly, overall, you know what is the context. I am watching till David comes, but I believe that we're not having him today. But in any case, he comes, I will just close the webinar. But if he is not around so far, I will try to get a little bit deeper, answering Peter's question. New Zealand dollar is very dependent on Australian dollar, yes. No webinar by David today? Okay, so I could extend some more minutes, Karina? Or we have somebody else instead of David? Yes, you can. Thanks, Karina. Yes, we can. Yes, we can. So, okay. Yeah, of course, the New Zealand dollar. You know what? At times I feel, of course, taking care of the differences, that New Zealand dollar is kind of the same role of the Mexican economy in respect in of the American economy and the Australian economy. Of course, the context is very different. But we are like, okay, if the Australians are doing great, New Zealand will do great. If Australia is weaker, there is no way that maybe New Zealand could go better. But this was the exception. This weekly trendline breakout, in my opinion, was reflecting that the markets were starting considering that maybe the New Zealand economy could get independent or more independent to go in tandem with the Australian economy because of these new capital inflows that these people moving here should have had. But since I believe that everybody got disappointed, why? The Royal Bank of New Zealand realized that maybe at this point the investment, whatever the kind of investments they were, these millionaires brought to New Zealand to have the residency, at least they were not good enough by themselves to start generating some sort of independence from the New Zealand economy from the Australian one. And I believe that we have had already good time to measure that. So at the time the market is telling the central bank, okay, we're just ready to move in New Zealand dollar economy spree, just at that very moment the New Zealand dollar comes and says a super dovish comments on the economy. So that's super disappointing for a lot of people that bet, because this word is the correct one, that bet, that this movement, this breakout reflected that a lot of investors bet that maybe for the first time in a lot of years, the New Zealand dollar could get very independent from the Australian one. That is why this took place, this weekly breakout. If you go to the weekly, you realize, and I just closed the screen sharing, but well, if you go to the weekly, I will tell you. You have from December 19th, straightforward 1, 2, 3, 4, 5, 6 weeks in a row, bullish, breaking this weekly trend line. But if you go to August 24, 2015 is where this bullish movement started. Of course, not straightforward, but it started there. So we have more than 1.5 years of this bullishness. This latest movement breaking this weekly trend line was betting for this. Of course, was a higher risk, a high risk bet. At the end, it didn't work. So that is why, again, I believe that the market started doing what they did. They just tried to fake, to create artificial illusion of this. Maybe yes, this breakout was for real, was true, was maybe the market was just taking a breath and will continue moving up. And then we have, as Peter said, a weak retail sales number by the New Zealand economy, plus the New Zealand Central Bank dovishness, disappointing everybody, because I can tell you that a lot of people were buying this, expecting that the New Zealand dollar, and I said that I wouldn't be surprised to see at the ending of the year, the best performer currency in the world to be the New Zealand dollar. But if and only if these assumptions that a lot of people had upon the New Zealand dollar new millionaire immigrants to really be reflected solidly in the very fundamentals of the New Zealand economy, but that didn't happen. So yeah, I believe, and now I believe, that the market is heading to retest that 2015 low that it's at. Now for me, the no-brainer is the 0.7, of course. But I don't think, I believe that since August 2015 that this bullish movement started was due to this, mostly because of this. They were trying to anticipate an independence of the New Zealand economy becoming independent from the Australian one. So yeah, I believe that the real, at least next target for New Zealand dollar in this year is going to be the 0.64 or even the 0.61. That is how dovish I am now on New Zealand. It's like how dovish I am in Mexican economy. It's more or less the same because of very different reasons, of course. So, well, here we have another comment. Retail numbers usually don't change the trend, but it supports a bearish assumption. Yes, in this case was like, if we hadn't enough bearishness, we just had this disappointing us even more. By itself, it's not that bad maybe, but when you are putting in a context that you feel hurt your illusions, your expectations, and you have this bad news, feels like a huge bad news. And that is why the market's continuing getting out and getting out. Here it says, here it says the Royal Bank of New Zealand dovish can change the trend. Yes, because this is the maximum authority that has information to see if actually the assumptions of the market this last year that millionaires could invest there and get independence, certain independence from the Australian economy, is not working that way. That is pretty much what I expect. So at least the 0.7 is in target now. I still believe that maybe even the 0.64 or the 0.61. It depends on, of course, the year. But yeah, I believe that this, it would have been great to see this, how you say it, it would have been historic to see suddenly, oh, the New Zealand dollar is not mirroring the Australian economy anymore. It's getting really independent. That would have been great. But well, maybe that changes. Who knows? Australian dollar and New Zealand dollar is also very driven by the Fed. Yes, but I believe that now the Chinese, of course, because of regionalisms, the Chinese economy is having way more effect on the Australian. I mean, Australia is a huge mine that is selling ores of copper, uranium, raw materials, commodities to China. So if China slows down, Australia slows down because it's his first partner, at least in this area. It's like Mexico. We are selling manufacturing to the United States, but they are selling commodities. Australia dollar, New Zealand dollar pair didn't do much in the past few years. Long-term Australian dollar, New Zealand dollar is down. Looking at monthly, okay, let me check that quickly. Go to the monthly. Well, you mean that they are not pairing? They don't match in the past years. Well, if they match at 100%, maybe the Australian dollar and New Zealand dollar could be ranging. In this case, the New Zealand dollar has been gaining territory since, according to your comments, since March 2011 up to April 2015. Gain territory pretty much straightforward. Then we had a retracement, and from July 2015, the Australian dollar has lost territory for the New Zealand dollar. But if you go again to the monthlies, these latest months, since actually in the monthly chart since September last year, 2016, we had the most massive volume inflow in the Australian and New Zealand. We didn't have that kind of inflow since June 2009. And that volume was just a very good looking bullish candle from the 104. If you see now, this latest month, we have a huge candle to the upside. So what I believe is that this is like suddenly waking up from a beautiful dream on the potential of the New Zealand economy that maybe started, of course, for other reasons since 2011. But now I believe it's over. So the market retested the 104, and now flows of money is starting to flowing against the New Zealand dollar, because maybe what you could expect for the next years is some kind of movements from the 104 to the 1.2 or 1.20, 25 something. Yeah, trading the crosses is something that could be very beautiful if you're positioned in the right side and if you have a decent account size to support those swings. 400 pip last month in Australian dollar, New Zealand dollar. Yeah, exactly. Yeah, I believe that at some moment, I think this is even putting much more context. Why this breakout so important in the New Zealand dollar? All depended on that breakout. To really to have a real fundamental effect on independence between New Zealand dollar, New Zealand economy and Australian one, this weekly breakout was even more important than I thought. So well, that explains why the market tried with all their means to put back again the price above the 0.72 and to try to simulate bullishness there. Yeah, I believe that we are just about to see maybe, yes, what I said, a retest to the 6.64 or 0.61 in this year in the New Zealand dollar. And that should be reflected in the Australian New Zealand dollar more or less to get to the 1.12 at least by the end of this year, I believe. We have to wait how the candle finishes. Yeah, it looks super bullish, this candle. If things go the way I think they're going, I believe that we will have it closing close to 108. Imagine that. Oh my. Well, it would have been great to have another more independent economy to be the New Zealand dollar, the New Zealand economy. So well, now it's time that I leave. Thanks a lot, Sharpsons. Peter, thanks really a lot for your feedback. It really makes and gives an extra super dimension to the webinars. It's simply a different experience to have feedback and this is really awesome. Thanks a lot. Thanks a lot, my friend. I expect you here more often because I've seen that maybe you've been busy trading or doing something else. I would like to thank all the guests for being around, and of course, Katarina for recording and being around. Today is Friday, so we will see you on Monday. I will let you know how my trades end up doing. If I had or not a margin call. Now I am a usage of 80%, so if at this moment it was 18 hours GMT time, all my trades would be closed because of the margin call. Maybe if I see, maybe I could close beforehand the New Zealand dollar trade to allow maybe the Mexican peso to get to the 20.75 next week. I don't know. I will simply take that decision after London closing to see how this goes. The Mexican trade, it's looking very, very nice. So I just hope that it gets above the 20.5 and my problems will be solved. In any case, somebody is following this short trade in the New Zealand. Remember that due to the price action, our stop loss should be more or less at 0.7250. This is the only disadvantage in the short term for this trade, because of course the simulated demand above the 0.72 reached the 0.7245. So yeah, some pips above it. It's just a precautionary option, because yeah, the most likely thing is that the market retests that it will sell back to the 0.72, but it's just a seatbelt in any case that you're following it. In any case you're following the long USDMXN, remember that the stop loss is at 20.2. So remember everybody that I expect you on Monday. Remember to enjoy your weekend with your loved ones. Thanks Sharpson, thanks Peter. I wish you to have a very nice weekend surrounded by your loved ones. And remember that I'd expect you all on Monday, same time, same place. Remember to trade safe, be safe, and bye-bye.